Hi there, I'm Tyler Ballhorn. Welcome to the Trade Scores Market Minutes for January 31st, 2011. This week I will go through the charts of the important indexes that I follow each week, and we will see that there is some uncertainty in equities. I'll also teach you how to read chart patterns, going through the basic 5 elements that are important to understand if you are going to read chart patterns. And finally, I'll show you how to use the sector analysis tool on tradescores.com to really get a feel for the market to figure out where the action is. Let's get started with that analysis of the sectors. I am here on tradescores.com. I have entered in the symbol for the Dow ETF, symbol DIA. I did that in the top right-hand corner of the website. That brings up the chart, and we can do a little bit of quick analysis here to figure out what's going on. Now, the first thing we want to look for is the general trend, and of course the trend in the Dow is up. However, the tops are not rising as quickly as the bottoms, and we had a little breakdown, of course, on Friday, and that indicates that there is increasing uncertainty. You notice also that that downward move was on strong volume. That tells me that the market has a good chance it's going to pull back to that long-term upward trend line, and therefore some caution in the short term is warranted. However, the upward trend line has not been broken, and therefore the buyers remain in control in the longer term. The Dow 30 is a bit of a deceptive index because it is only made up of 30 stocks. I like to look at the S&P 500. That's probably a more accurate representation of the US stock market. And again, we have that same sort of problem. The bottoms are rising quicker than the tops. That means that the sellers are losing their motivation. And then, of course, we had that downward move on Friday, which sets up for a pullback. We don't have a long way to go to that upward trend line. In some ways, that is good. It means that the downside is minimal. But it also means that we are flirting with that long-term upward trend line, which could be bad if in fact we get a break of that long-term upward trend line. So I suggest some caution in the short term, but don't despair if you are long stocks, as the likely outcome is this trend will continue. Now if we jump over to the Canadian market, we see a little better chart pattern. Again, the bottoms are rising. That is a strong point. But we have not had that downward move like we saw in the US market, and really the Canadian market continues to trend higher in this upward sloping channel. It's paused for a few weeks, and I think many Canadian investors got a little bit bored over the last few weeks, but as we now move to new highs, it looks to me like the trend will continue higher, driven largely by the strength in gold and oil. EEM is the symbol for the Emerging Markets ETF. And here we have a situation where the bottoms are rising, so the buyers are in control, and we'll talk about that in a moment. However, we have recently broken down from a pennant pattern here that happened on Friday, and we'll now test this lower support zone. So emerging markets are certainly not faring as well as the North American markets, and I would put a neutral rating on this, but really on the negative side of neutral, as I do think some caution is warranted with the emerging markets. All right, let's jump into commodities now. This is a chart of oil, or at least the oil ETF, which is based on the spot price of oil. And we can see that we really had a good bounce off of that upward trend line. And of course, it was motivated by some abnormal events in Egypt. However, we'll take what we can get. Oil looks like it will now come up to that line of resistance where it will probably get stuck, and I expect wind its way sideways here as things cool down in the Middle East. Of course, we could break through resistance, not likely to happen, but certainly possible, in which case we'll head back up toward that longer term resistance. What's important, however, is that the bottoms continue to rise in this chart, and that is a sign that investors are optimistic about oil's future. Well, gold has been an underperformer for the last month or so, although certainly longer term gold has been an outstanding trade. I think really what's happening is that anytime the market runs away from its upward trend line like it did, we now work through this process of moving back to that long-term upward trend line. Now the weekly chart shows a little bit different picture. If we jump over to the weekly here by clicking on the 5-year, we get that longer-term outlook, and really gold is right at that long-term upward trend line. And so I think that gold should bounce here. However, I advise some caution, as if you take a little bit shorter-term view of gold, we are possibly going to see a little bit more profit taking in the near term. I like gold longer term simply because the trend is up. Just be cautious in the short term in case it doesn't hold this current support price at that long-term upward trend line. Well, here's the chart for the US dollar, and the US dollar continues to be in a downward cycle of falling tops, and we are now testing or sorely moving toward that area of support here. So I think in general, the US dollar doesn't look great, but anytime there's any sort of uncertainty in the world, we tend to get a pop in the US dollar. So I think it's a difficult thing to trade, relatively unpredictable because it tends to be so event driven. The Canadian dollar tends to be driven simply by commodity prices, being a commodity-based economy, and we have a trend that is up. Since the trend in oil and gold is generally up, that helps the Canadian dollar. I expect that we will continue to grind our way higher. Of course, a high Canadian dollar is actually bad for the Canadian economy as it makes exports expensive, and I think there is some effort to keep the Canadian dollar down by the Canadian government, even though really its fundamentals probably deserve to take it higher. The final chart this week is of the VIX, and we call this the fear index because the VIX is essentially based on the implied options volatility in the options market, and it will jump up anytime people expect volatility in the future. Now, we had it jump up on Friday, and that really shows us that uncertainty is increasing in the market. However, the long-term trend in the VIX here remains down. We haven't broken that downward trend line, and so these little bumps that tend to come in 2 or 3 day clusters tend to be driven by some event, and they usually quiet down over time, and I don't see any sign that this is going to reverse that long-term downward trend in volatility, and therefore we have short-term uncertainty, but the longer-term trend is toward confidence. So to summarize then, I am neutral on US equities. I think that there is some potential for more short-term pullback. Canadian equities look positive, oil is positive, gold neutral, it's right at that critical upward trend line. We could bounce here, and that's what should happen, but I do suggest some caution with gold. US dollar is neutral, it's really too tough to call. Canadian dollar is optimistic and positive, and the emerging markets I would put on the negative side of neutral as it trends sideways and starts to show some falling tops. All right, next up we have the Stock School section. To read stock charts, you really need to understand 5 things, and really only 5 things. I've listed them here. They are support, resistance, optimism, pessimism, and price volatility. Now, any technical analysis indicator will somehow come back to one of these 5 things. For example, a MACD indicator is about assessing whether the market is optimistic or pessimistic. Now, when we jump to a chart, I'll start to label these things, but really just keep these 5 things in mind, write them down, and learn them, because once you understand these 5 things, you can read any chart and get pretty good at predicting where stocks will go. Now, I have here a chart of Google, which will help us to understand these things. Essentially, when we talk about support and resistance, we're talking about horizontal lines on the chart at highs and lows. And so if we were to draw a line across these tops, we would have a ceiling price. We call that resistance. We could also draw a line across the bottoms here. Anytime the market stops going down and starts going up, we've formed a floor price. We call that support. Now, ultimately, when markets are able to break through resistance or fall down and break through support, they tend to go in a trend in that direction. Now, the next thing we need to understand is whether the market is optimistic or pessimistic. This is relatively simple. What we look for is, are there rising bottoms on the chart, like we have during this time period, or falling tops on the chart, like we have here. Falling tops are a sign of pessimism, and rising bottoms are a sign of optimism. If you can see the rising bottoms on a chart, you essentially know that the buyers are in control of that market, and it is a stock worth owning. A stock that has falling tops is something of a concern. Now notice, if we look at this chart, we had falling tops for a number of months on Google. Tops were falling there. But we eventually switched from from falling tops to rising bottoms, and that break of the downward trend line led into this upward move. And so it's very important to recognize these moves from falling tops to rising bottoms, because it often shows us when there is a trend reversal. Now, the last thing we want to talk about is price volatility. A market that has sideways trading is basically showing agreement among the buyers and sellers. And so right now on Google, we have diminishing price volatility over time. You can see that the waves of price movement are diminishing, and therefore investors are growing more confident. Now, when we get that diminishing volatility and then ultimately a break from diminishing volatility, it implies that there is new information that justifies prices moving higher. So if you can identify stocks that have optimism, breaks through resistance from periods of low price volatility, well, you often get a good trend out of those breaks. All right, the last thing that I want to show you is the Sector Watch tool in TradeScores. If we jump over to the TradeScores website now, pardon me while I do that, you can see that I'm in the Chart Watch area and I have at my disposal all of the sectors that you see along the right here. Now what I like to do to get a feel for the market is click on something like Canadian Sector and then look at the charts in a gallery view or a slideshow view of those sectors so that I can see whether the buyers or sellers are in control of a particular area. So for example, if we look at energy, we can see that the buyers are in control. We have rising bottoms on that chart. And so the energy sector is one that I want to be long. If on the other hand I cycle through here and I look at the gold sector, well, I've switched from rising bottoms and now I'm starting to see those falling tops building, and that is an area of concern because we've switched from the buyers being in control to the sellers being in control. Now if you do this on a regular basis, and I would say it's something worth doing at least on a weekly basis, you can start to get a feel for where there is action in the market. Here again, the buyers have been in control of the material stocks, but more recently the sellers are starting to show a little bit of control, and therefore it might be an area to lighten up on, maybe moving some of that money out of the material stocks and into the energy sector. Now you can use any of the sectors that you see in TradeScores and just go through those charts quickly on a weekly basis and try to identify where there's new trends developing, where there's trends that are well underway, or where there are trends that are starting to lose their momentum. Now before we end this episode of the TradeScores Market Minutes, I just want to let everyone know that I will be teaching 2 live classes this spring, Vancouver March 13th and 14th, and then Calgary May 1st and 2nd. And in those classes I will teach theory on the Sunday, and then I will demonstrate with live trading on Monday. I will show you my position, swing, and day trading strategies, show you how I find them, and then of course I'll actually trade them and show you how I do it for real as opposed to just talk about it in theory. Registration details will be coming soon. Watch these videos or follow us at the tradescores.com website or the stockscores.com website, and certainly sign up for those free newsletters on stockscores.com and tradescores.com so you can get an update about when these classes are coming. Well, that has been the TradeScores Market Minutes for January 31st, 2011. I hope they've been helpful. Have a great week in the market and trade well.